Guys, in this video I want to show you most commonly accounting question that you're gonna get when you go to the interview. So there are many different ways that the interviewers can ask you the questions depending on the position that you are applying for. However, there are certain questions that are mostly frequently asked on every interview that you're gonna go when it's dealing with what? With accounting. Alright, let's go. Number one, you must be able to answer the following question. They can ask you the main purpose, or they can ask you in this way: what does the following financial statement reveal? Remember, we have an income statement as a one of financial statement, we have statement of financial position, we have a cash flow. So you must be able to know that when we deal with income statement, what does the income statement reveal? What's the main purpose to prepare income statement? So when we prepare income statement, of course we are looking for profit. We are looking for profit. So you must be able to know that when we prepare income statement is going to reveal all income in by the company and all expense that has been carried by the company. You must be able to expand your answer with the confidence. So number two is statement of financial position. So what's the statement of financial position reveal? You must be able to know that this financial statement reveal the position of the company. So in this statement reveal that the company has more assets and less liability, or have more liability or less what? And assets. You know that if we have less assets and more liability, we're in trouble, or we are not in a good position. So you must be able to expand this answer. So number three, the very important statement, a cash flow statement. This statement reveals cash received or cash paid. So this statement reveals only the cash that the company has received and the cash that company is paid out. So you must be able to know the main purpose of all these three financial statements. So question number two that mostly frequently asked is you must be able to know one of the financial statements that show overall healthy of the company, and you must be able to know why. Are you saying this is the one that reveals the overall healthy of the company? So remember, on the first question we have three financial statements, but in this case they said we have to point one statement. All right, number one, let's check. What if we pick up income statement? Does income statement reveal a healthy of the company? Maybe someone can say yes, because it shows the profit that company is making. So when it comes to this question, the income statement will be no. Why? Remember, the profit that has been revealed by the income statement, it has non-cash item. If you still remember, when you go to your expenses, we have something like bad debts, we have something like depreciation. That's a non-cash item. So it cannot actually reveal the profit that the company is making. So let's go to number two, statement of financial position. Does this statement reveal overall health of the company? No. Because when we deal with statement of financial position, if you check on your assets, we have receivable, we have a debtors who take the inventory on credit. We are not sure whether those debtors are going to pay or not. So, however, when we record it under statement of financial position, we stated that we have so much as an asset. So that cannot be assumed to be actual amount that we have. We are just expecting that those people are going to pay. Number three, a cash flow statement. Yes, this is the right one. A cash flow statement is the one that reveals the overall of the health of the company. Why? because this statement reveals the actual amount received and the actual amount paid. So this statement does not deal with the estimation. It's only deal with what? With the actual amount. Let's go to the next one. What is working capital? So when we say a working capital, we're dealing with what? It's assets less liabilities. So when we say a working capital, we are looking for net assets. So this is how you should expand this question. You must be able to know what is working capital and what working capital consists of. It consists of assets less what? A liability, which is going to give us the net assets. So after this question, they're gonna ask you what is the meaning of having a negative working capital. So you must be able to understand. If we have negative working capital, what does that mean? If we have positive working capital, what does that mean? Okay. Number one, if we have a negative working capital, this question you have to answer it in a very smart way. So, a negative capital is depend on the nature of the company. Sometimes a negative capital can be a good. Why? Because it can be simple, means that the company has sold all the inventory that they have, which means that we're expecting what? We're expecting a customers to pay, which means that our inventory are being sold so fast. So, however, sometimes it can be bad. Why? Because this can indicate that we have what? We have more liabilities because our assets will be less. So you must be able to expand it in this way. So mostly you have to say that this is vary or this is depend on the nature of the company. So if we are dealing with the company that sell with only cash, if you have negative working capital, this is not good at all. Alright, then the following question we're gonna have: how does an inventory written down affect three financial statement? Number one, we have income statement. How is it going to affect our income statement? Number one, this is going to increase an expense because we are going to write it down as an expense. All right. Then number two, we have statement of financial position. How is it going to affect statement of financial position? The value of inventory will go down. The value of inventory will simply go down. Okay, then what about cash flow statement? Alright, so when we come to cash flow statement, there is no effect when we write down the inventory. Remember, the cash flow statement deal with only what? Cash items. So when we write down inventory, we are just reducing the value of what? Of inventory. There is no cash that has come in, there is no cash that has come out, which means that there is no effect when we come to what? To cash flow statement. So when you go to the interview, guys, please make sure that you answer each and every question that they're gonna ask you. Have a confidence. Don't jump the question and never say you don't know anything. Please make sure that you try all your best. Thank you guys for watching. So make sure that you subscribe. I'm gonna upload more videos. I'm gonna try to come with the other questions that is going to assist you. Thank you. Goodbye.